All right, let's talk about a property that's got a real split personality. We're diving deep into Residensi 22, smack in the middle of Mont Kiara, Kuala Lumpur's top spot for expats. Now, this one, it's a super fascinating, kind of complex case for any investor, so let's just jump right in.
So here's the central puzzle, right? How can a property be this amazing rental machine, just churning out solid income, but at the same time be a total letdown when it comes to capital growth? I mean, it costs some early buyers a fortune. That's exactly what we're going to unpack today to figure out who this property is actually for. Okay, to really get our heads around this whole contradiction, we've got to look at the basics of Residency 22, or R22, as everyone calls it. And the best place to start? Well, it's always the data. And when you first look at the numbers, everything seems perfect. I mean, check this out. The location, Mont Kiara. Can't get much better than that. The developer, UEM Sunrise, a total blue chip company. The tenure is freehold, which, as you know, is the gold standard. You own it and the land forever. And then there's that rental yield, an estimated 5.4%. That's a really, really solid number. So on the surface, it's all looking great. But, and this is a big but, that juicy rental yield is only one part of the picture. To really see the risk, we need to rewind and look at its price history, because that's where the big problem is, especially for anyone who got in at the beginning. So the project finished up in 2017, and then boom, in 2018, the price per square foot just went through the roof. But that high, man, it didn't last long at all. It was super short-lived, and what followed was this long, slow price correction that's pretty much still happening today. And this chart, this really drives home the pain point for those early buyers. Look at that peak price in 2018, a massive 1,527 ringgit per square foot. Now look at today's median price, 1,139. We're talking about a pretty major hit for anyone who bought at the top. That's a significant paper loss, no two ways about it. Okay, so you might be thinking, if the capital growth is so bad, why are we even talking about this property? Why is it still on the radar? Well, the answer comes down to its incredibly powerful and, I'd say, very defensive rental niche. It all comes back to this number, 5.4%. Getting a rental yield like that in a super competitive area like Mont Kiara, well, that's the heart of the whole investment case for R22. It's the engine driving all the interest, even with that rocky price history. So the big question is, how does it pull this off? Well, R22 is playing a very specific game. First off, it's got these huge family-size units. We're talking nearly 1,900 to over 3,000 square feet, which are getting harder and harder to find in new buildings. But here's the real kicker. It's literally a stone's throw away from two of the top international schools in Malaysia. This makes it an absolute magnet for well-off expat families who are more than willing to pay a premium just for the convenience of walking their kids to school. But here's the irony. The very thing that makes its rental demand so strong, that prime location, is also the source of its biggest headache. It creates this massive, daily frustration for anyone who actually has to live there. Yeah, when you talk to residents or read reports, one word comes up over and over and over again to describe the traffic on the main road: horrendous. That peak hour gridlock, it's not just an inconvenience, it's a defining and really negative part of the whole living experience here. And the thing is, you have no choice but to deal with it, because this place is almost totally car dependent. Sure, you can get to the major highways, but there's zero direct access to the city's MRT or LRT system. The closest train station is a 14-minute walk away, and it's a KTM line, which isn't very convenient for getting to the main business hubs anyway. So what does that mean? It means if you live here, you're signing up to battle that traffic every single day. So, let's just recap. We've got a fantastic rental yield on one hand, but pretty dismal capital growth on the other. It's a dream location for expat families with kids in the nearby schools, but an absolute nightmare for anyone who has to commute. So, when you weigh all that up, who is this property really for? Look, this property is definitely not for everyone. It's for a very, very specific kind of investor. We're talking about someone whose number one priority is high, steady rental income. Full stop. The perfect buyer is someone who gets the expat family niche, is laser-focused on that 5.4% yield, and is totally okay with not making much, if any, money from capital gains. And here's the key part. Since they're not going to be living there themselves, that horrendous traffic, it's not their problem.
So if you're looking for a hands-off, income-generating asset, Residensi 22 is a serious contender, for sure. But for pretty much anyone else, say if you want to live there yourself, or you're an investor hoping to flip it for a quick profit, the weak capital growth and that daily convenience nightmare are huge red flags. It really boils down to this final question. For a pure yield seeker, it's a great option. But for everyone else, is the price of that convenience just way too high?